Good morning and welcome to another edition of Roadhouse Live. We are live. Today is May 24, 2023. Bender, how are you, sir?
Well, I'm all right. I get to go to the dentist again today, so, I've got that. I'm excited. It's like my least favorite place to be, sitting in that damn chair.
Yeah, I don't think anybody likes the dentist. I think that's one of those necessary evils.
I almost feel bad for them a little bit because it's like one of those jobs where you know that 99% of the people that come to your place of business don't want to be there, and it's like we need them, but at the same time, a lot of times it's kind of a thankless job, isn't it?
Yeah, but that's kind of what they chose, right? They did go to school for it. They did open a practice. They did do all those things. So I don't know that I feel for them. I just wish it was easier. I do. I wish it was easier. But it's like if you don't go once, either at a minimum, you have to go once every other year to get your teeth cleaned. If you don't do that, you're setting yourself up for shenanigans. Like they got to bring in the claw.
What gets me with stuff like this is it's like we can like land shit on the moon and develop these exoskeletons for equipment that can sustain the harshest environments that we can't even conceive or fathom. Like normal people can't think about the fact that some of the environments that this equipment is able to withstand is just beyond comprehension. Yet, like, really, we can't figure out some toothpaste or something that it's like, unless you need braces or a retainer or something like that, you don't have to go to the dentist because this nanotechnology, blah 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 blah, protects, provides all the protection that you need. Your teeth will last for 1,000 years. Like, how have we not figured that out? I guess it put a lot of people out of work.
Isn't it always one of those things when it comes to medicine in general? It's like it's never something to where we don't want to fix it. We don't want to find a solution. We only want to create Band-Aids to slap on and that require maintenance. It's like that's really what the medical industry is at this point.
It's almost like every industry, but yeah. Oh well.
Well, Bender, so we have some red candles again. It's like your levels played out really, really well in watching. I think we did some additional penetrations on those levels to the down. And kind of sorting through everything. It's like, so what? It's like the global markets have been absolutely on fire recently, right? It's like you have China banging up there, you had Japan banging up there, Europe was like, oh man, it's free champagne and whatever for everybody. And then over the past couple of days, it's like some of that luster appears to be wearing off of these markets a little bit. So it's like Sonny and I were talking before we jumped on the show. It's like this is like roulette headline. Which headline do you want to look at as far as why there's red candle? Do you want to look at resurgence of COVID in China? Do you want to look at that CPI print coming out of Great Britain being way the fuck out of control, like way out of control, which kind of puts the EU in a position to where they might like legit have to raise because no matter what. Or do you want to point to our daily soap opera with the debt ceiling, that everybody believes it's going to be a-okay. But we're counting on some dingleberries to actually get it done. And I think, Minder, whenever you have to count on dingleberries to accomplish a task, I think you're setting yourself up potentially for disaster. What do you think about dingleberry?
You go through all that only to ask me what I think about dingleberry. Like, yeah, I try not to rely on them.
Try not to rely on dingleberry. We pay dingleberry.
Yep.
And dingleberry basically is responsible in a lot of ways for how we live our lives. Dingleberry. And for those of you who don't know what a dingleberry is, I strongly suggest you Google it and get a strong mental image of what this is. All right, so that's what we have. Coming into the day, we actually have the VIX trying to move a little bit. Gold caught a bid after being down, which is a little bit interesting. The dollar is, I want to say, fairly flat to kind of wibble wobbling in through here after having a pretty good run. What we are seeing is weakness in tech and weakness in growth. Some of the growth names, it's like that is apparent. That is taking a hit. Now, the question you have to ask yourself is this, and through the years, you always have to look at it with a very sharp eye. Is this the beginning of a larger spill, or is this nothing more than an opportunity that's being presented to take profit, to justify profit taking, and to buy at lower levels? That ultimately is the question as far as what it is. Regardless, the price keeps on going down. So while the price was going up, I kept on saying, something is worth what people are willing to pay. The past couple of days, they're not willing to pay what these things were worth. So therefore, they're worth less than what they were a couple of days ago. Now, does this flash back? Does it bounce back? We have Yellen speaking today. We have Fed minutes speaking today. Are there tea leaves to be offered? Is there anything of substance that's going to be given? Is McCarthy going to come out and say, oh, we're really close to a deal, and one of his minions is going to be like, we're nowhere close to a deal? Is Biden going to do something silly? What are we doing? What are we talking about? This is butt fuckery is what this is, that is being perpetuated by dingleberry. It's a lot to digest, Bender. So when we get into scenarios like this, where there's so much to digest, we have to go back to the chart. With that being said, what you got in them charts, man?
I mean, we covered butt fuckery and dingleberry. It's, I think we've nailed it. I think we can just call that a show.
What else is there to say?
What else is there to say? Yeah, once you've touched on those topics. Okay. This is a 1 hour chart here that I'm showing. Let's talk about this first. If we measure that 4062 low up to the 4227 high, the midpoint of that comes in 4144.75, and the 618 is down here 4125.25. Notice the purple shaded box. These are previous new week opening gaps. So we traded, we talked about this one yesterday that we bounced off of, about that being a previous new week opening gap. Traded through it, and now we're into this lower one. But really, I just kind of wanted to show these fibs, show that, okay, in here between 4144.75 and this 4125.25, we're in that zone between 50% and 61.8% retracement of this move. The other thing I want to show here, I'm going to a regular trading hours chart here. You can see this blue box down here is an actual gap that has been left open. That gap starts, the top side of it, 41.05, and the bottom of that gap is 4097.75. And then you have the 786 fib just under that 4097 half. So I don't know that, necessarily that we get down there, but those are kind of some of the bigger picture, some of the things that, we'll be looking for. I'll zoom in here to a 15-minute. What's up?
No, is it? Well, I'll let you finish, and then the one ticker I want to bring up as far as all that is concerned.
Okay, so here's the 15-minute, and I've got a few lines here that I've thrown out there. This is kind of the stuff that I would be looking for if we meet the objective, whatever they're going after, and we start moving back up later in the day or something like that. These are kind of the levels, the areas that I'll be watching for as signs, right? The first is this 15-minute fair value gap here. If we can trade up through that, then we've got the top of that new week opening gap, 4153.25. And then this first line here, which you can see the top of this candle right here where I started that line, when we got the bounce, that didn't get taken. So this stuff is still hanging out there. So I would say if we can get through this and take out 4158.25, then we're looking at 4166.25. And this is the same sort of, if it takes it by one tick, comes back down, then that's what it was after. And we got to be careful that it got its liquidity ultimately to drive lower. If we can take it and hold it, then we're looking at 4166.25 and above that. Then we can start pushing back towards 4,200. As far as downside goes, you can see outside of that new week opening gap, this, as we know, right, 4138 to 4150 or so was just chop, right? Just back and forth. 4148, that level that we got tired of talking about. So there's a lot of stuff in here. I don't know that any of it is all that meaningful, right? So, taking any one of these candles or levels inside of here, I don't think really has a whole lot of significance, which means that there's not a whole lot in here that I would see as being that target until we get, down here 41.25 half. And we're looking at kind of the bottom area of this, also that being that 618 fib. So I think there's a reasonable chance that this is the target area down here. But again, we're in this previous new week opening gap. We're in between 50%, 61.8%. They could choose to, buy it back anywhere in here. Mm-hmm. But I don't really see, like I said, anything super meaningful or impactful until it takes that 41.25.25. And if it takes that and uses it as resistance, if it's not a one tick back up, then we're looking at 41.11.75. Below that gives us the 4100 test and probably close this gap. And then we have to reevaluate because the next swing low is down here at 40.62 half.
All right. So what's interesting about that gap and what's interesting about that chart, and then I say interesting again, as far as, the market maker of the market, if you will, Apple has a gap down to about 165, 166, somewhere in there, which I think correlates with your gap there on the ES. Apple Flow there's been some longer dated, call buying, but yesterday we saw a lot of calls on the bid for Apple. And we saw that they were trying to nail those 177.50 calls out the next week, and they gave up on those at the end of the day yesterday. They just bailed. Be like, it ain't going to happen at this level, or we can buy them back cheaper, or maybe we see some activity in the next week's 175 calls instead of the 177.50s, whatever it may be. But that gap exists down there. It was also mind numbing to me that Apple has so many gaps on the daily. Of all the tickers that I sorted through, it's like I was just dumbfounded by all of the gaps on the daily when it came to Apple. Mind numbing. And everybody's been looking at the most risingest wedge to ever exist within the market on any ticker, which is basically Apple. And then you look at it, and then you look at these gaps, and it begs the questions: okay, do these gaps fill? It's like, is this a thing? What are we doing here with the Apple? So Apple again, and this is like one of those charts, and I'm so happy you pulled this up with Apple. You can make the argument, okay, that's a double top on Apple, right?
I can say that it got taken by
a tick,
just a hair.
Yeah. So you can make an argument, give or take, okay? You can also make an argument that was a test to break out. It failed. Now it's going to consolidate and plow through that previous resistance and go. You can make that argument because there was flow pointing to later in the summer out to September that it's going to be banging up well into the 180s, approaching 200. There was flow, but they peeled off some of that. So Apple will continue to be, at least to my eye, the one, knowing that there is a very achievable gap down in that 165, 166 range. It's a very achievable gap for it to go back and fill. Very achievable. We're not talking about, a gap down to like 130 or something like that. We're talking about a gap that is within range that it can do, maintain its structure, and move higher. But I think the question is for the market in general, when you have Apple sitting like that and you have the behemoth of NVIDIA reporting tonight after the run, it's like, when if you're going to place these bull bets, whether it be a week, a month, or whatever out, when do you start doing that again? Because it seems a little bit dicey in through here, like to do it in advance of these moments of time. Like, wouldn't you feel better, like if Apple comes down and at least tests that gap to go ahead and try to long up again?
I would, yeah.
Yeah. Anyways, one of those things that hit me. And then when you showed that chart with the gap on the ES, it was like, okay, there's some things that are lining up here more so now than they have recently. Other than it's just lighted on fire to the upside that we've seen over the last week or so. Okay, well, thank you for that. Do you have anything else you'd like to add? All right, Sonny, what you got, man?
That's it.
Morning, everyone. Starting with the upgrades. So Camping World upgraded to outperform, and that ties in with them also announcing their dividend of 0.65, which will be payable on June 29th for shareholders on record for June 14th. The other one that correlates with the Toll Brothers yesterday, where they guided up, is Sherwin-Williams. Jefferies upgrades to buy from hold with a price target of 275. I mean, you make more houses, you need more paint. Williams. Logistics side, RXO is started as a buy by Barclays. I had mentioned there was a lot of dark pool activity coming into these trucking companies, the logistics companies last week. So definitely take a look at that sector. Downgrades, SHOP. It's been downgraded, underperformed from neutral. That's the only meaningful one that I see in there. On the price target upgrades, Palo Alto Network, price target upgrades across the board to 240, 250 area. NVIDIA got a Citigroup upgrade to 363. 3 from 305. Lows has a mix of price target cuts and raised, and they kind of end up at the same area, so about like 240 area. Into it, price target raised, even though the year wasn't all that great, their price target's been raised to close to 500. Some of the retail names that we were talking about yesterday, Urban, Kohl's, they all reported really good numbers. They all gapped up and holding their gaps. So this doesn't bode well for anybody thinking about rate cuts, inflation going down. I don't think it is. Mortgage applications fell by 4.6% as the rate is above 7% now. Give me 1 second. Yes, other ER, XPeng stock, their year was really bad. Weak sales forecast. They dipped down about 5% this morning. I'll be watching that sector, especially on the Chinese name, EVs, NEO, XPEV, LI. And White House is starting to develop a national AI strategy. They published the document, sort of a white paper. If anybody wants to read, I can send you the link for it.
I think that's racist. You need to back off of that, please.
What should I call it?
I don't know. Beige?
Dingleberries?
Well, that could be multicolored.
Yes.
It's like that's
they change color as they ripen. And on the dark pool side, interesting dark pools into all the mega caps: Apple, Amazon, Google, Microsoft. Nice. I think Stonky posted. I'll post it as well. The one that they've been consistently coming into is a biotech name, Fold, Fold. They've been buying a lot of it, selling a lot of it. I'll post all of it. I had marked it down. And Figs, Figs, another one they've been coming into since yesterday with a large number. Yesterday they came in at 50% of the 30-day average. And Pepsi got another 35% of 30-day average at 186.07. And that's all I have.
all right. Very good. Well, there you have. Okay, no, we get started. Sorry, Stonkington. Oh my goodness. Oh jeez.
Yeah.
Stonkington. How's it going, buddy? What you got for us?
It's going great. Here we go. We've got a new world record. I guess it's not new, but let's discuss a world record. Most straws fit in a person's mouth. Now, no hands allowed. I know some of you out there, once you get some tube-shaped thing near your mouth, you want to get your hands on it too. But this guy did no hands. Sooners going 69 straws.
I think because I won the last one, I don't think I'm going to participate.
Yeah, well, you went.
I think he doesn't want to participate because it's cheating because he already knows the answer. Like he's been trying to accomplish this, I think. Practicing at home.
Look, if we're talking donuts, I'm pretty sure there's a world record I can break it. And when it comes to donut consumption, I'm pretty sure I can do it. So
my question is, Hells, as you're preparing to take this on, what do you tie them together and put them, set them vertically on the table in front of you and then just kind of bear down on them? Or?
Well, it's like if you listen to what he said, you can't use your hands. So what are you going to tie unless you? But it didn't say that you couldn't use your feet. So that would mean Delta should have commentary on this ultimately because of the feet thing.
It's not clear on which body parts he's using to insert the straws. I do see some rubber bands here. K-Mark's quickly increasing his guesses here. So all guesses are wrong and very low. We've got 650 straws. This guy did. What the fuck? That's a lot of straws. All right. Yeah, there you go, Minty. Okay, so let's get switched to real stuff. So this is the SPY chart with two other line graphs laid over it. One is the crude futures, and the other is the XLE. One of the lessons from the macro book is that oil and energy will peak before the SPY, and can sometimes, and this is not set in stone, but it can sometimes give hints. And so we, looking back at, for examples of this, we see here peak, and then we drop. We see here peak, a little bit before the SPY, drop. Come over here, some peaks, we start to drop, peaks, we start to drop. And then we're looking here, it's like, maybe. So, but this is just a historical thing found in the book. So it was kind of interesting to take a look at as we see, we've had some bullish days on oil historically. So that was one that was kind of like, it's part of the book, and we'll see if it plays out. So that was kind of interesting on the SPY, and then just kind of comparing oil and energy. Jump back over here. Apple. So the blue boxes are these gaps that Hells was talking about. And this was just like a lesson for me from listening to Bender and Hells. Like, sometimes they'd be talking about these gaps, and I'm like, I just see candles. I don't know where the gaps are. So this indicator right here has been really helpful for me. Fair value gap spaceman. And just kind of highlights the gaps, and it bases on the time frame. So if we swap over to the daily, you can see all I did was throw on that indicator and draw them in. But and the only thing I've changed on this indicator is invert the colors, because I consider filling a gap below to be bullish. So I just marked those as green. Yeah, so the risingest wedge broke overnight, looks like to me. Below, I'd be watching this dark pool right here. That's going to be 169.59, 8% average 30-day from back in May. And then if we're going to go up, I had this fib right here that was originally going to be the put trigger. You can see all the reactions to it so many times. Bang, 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 bang. More over here. So if we're going to go back up, I'm going to be watching 171.40, and below I'll be watching this 169.59. Usually I just swap that over, get this mental reminder, boom, done. All right, so that's Apple. That's what we'll be watching on Apple. If we swap over, let's check out the Russell. That one's having a good sell-off here. Broke this rising wedge I had going. Left this, so if we're going to push back up, I'd be looking, if we're going to fill this in, this would be a nice target for upside. This 1794.70 area. And then this is our new week opening gap on the Russell. So this, we kind of traded through it at the beginning. Yeah, so I'll be watching. This would be a downside target if we're going to continue to push down. We still saw more of those DPST bid side puts. They've been buying small caps, so it'll be kind of interesting to see how the Russell plays out. And then if we jump back over to the NASDAQ, let's see. So this is
I agree. I do think it's going to be interesting to see how it plays out, because the Russell, IWM, small cap, whatever you want to call it, they've been playing catch up to the rest of the market. And we've seen that strength come back in. But the question ultimately is this a dead cat bounce? Because there's nothing grand about that sector. There's nothing like, oh my God, that sector is so bullish, other than it just being beat into the ground. There's nothing attractive over there for the most part. So I think you bring up a really great point as far as the flow moving forward and keeping our eyes on that. So thank you for saying that.
Yeah, I think it's important. And I think another thing is that we would note is, like, one of these macro book lessons is that a new bull market is not going to be led by the big dogs. Usually a new bull market would be led by maybe potentially small cap or a different sector, but it wouldn't usually be like the historical big dogs. So that's something.
Isn't that historically because they didn't have computers back then? I know. I'm just trying to I'm not trying to be a smart ass. I'm just trying to be like, well, they didn't exactly have computers back in the 50s, 60s, for the most part, 70s.
That'll be a good homework assignment. I'll try and find a
Okay.
entry of the last bull market and see who the leaders were. Yeah, nice. Duke's getting into that book. Good. Okay, so here's the NASDAQ. Yellow boxes are daily fair value gaps. So we left the little one overnight. And then we've got this one below. So this would be a downside target. But then we can see all the taps off this trend line that we're quickly approaching. So it'll be, we'll see if this is going to be potential bounce or not or what. Bender was showing his shorter time frame ES chart, which got me zooming in a bit here, so we can see if we're going to go up, potentially see if we can get up into this area for upside targets. So this will be it'll be really interesting to see how today plays out with this approaching this trend line here on the NASDAQ. And what was the other? Let's see.
That's another one that looks double toppy. Your NASDAQ over there.
Yeah, that one yesterday on the 4-hour was just ridiculous. That double top on the NASDAQ. And then Meta, daily inside bar on Meta. So let's check out Meta. We've just been in this rising channel, and then looks like it's going to come down and check this dark pool right here. I guess I didn't have that one labeled. We could check with Sunny, 243.98. So again, I would just swap what was originally going to be my put trigger to this 246.05-ish, would then become our call trigger. And so we'll be looking at 246.05 for upside, and then 243.98 for potential downside and breaking this big old bear flag. And that's all I got.
All right, very, very good. Okay, so there's the set. I know we have Yellen. I know we have at least one Fed speaker before minutes comes out. We have minutes, and we have additional data for the rest of the week. We also have NVIDIA ER this evening. So at the end of the day, your money is your money. You place your bets where you want to place your bets. Tough environment to be like, you know what, I want to buy or sell out to next week. Tough. Tougher than normal because you have so many candles that can literally whip you over the next couple of days. So with that being said, we have 7 minutes until open. Let's get comfortable. Let's do our thing. Let's have a good day, and we'll see you soon.
Thanks, everyone.
See you.